Good morning, and welcome to episode 138 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, August 30th, 2023. Every now and again, I break from the normal format and I don't offer any pricing because I want to take the extra time to cover a certain topic that I think needs covering in some sort of depth. And today is one of those days. Over the past couple weeks, we saw some pretty interesting price action in precious metals. It moved the gold price down below $1,800 an ounce. Silver also fell pretty calamitously as well. And as a result, it generated a lot of questions from people saying, hey, is this the end? Is this the end of the bull market in precious metals? Is it time to get out? As most of you know, I buy precious metals for two reasons. The first and the foremost is wealth insurance. I buy that's gold, it's a small percentage of my net worth, and I hold on to it forever unless I have some sort of crisis. But when I buy that wealth insurance, I like to buy it well at reasonable prices. In addition, I buy at times for profit, but it's only when the market is set up well for me to buy at reasonable prices where I can expect to receive some sort of profit in return. And there, I like gold and silver. I actually typically weight that towards silver for a profit motive. So whether I'm looking to buy my wealth insurance well, or I'm looking to buy for a best profit potential for gold and silver, there's certain things that I look for in the market that suggest that it's a good time to buy. And that's great, especially for the for-profit metals, up until the point where, the market may be in a bull market and that pullback is no longer, say, a dip, but it is now the start of the new bear market. And there are certain things that I look for to give me that indication. The first thing is duration. I'm looking for a bull market based on the previous two that we've had since gold was decoupled from the dollar of about 10 years or a decade or slightly longer for a bull market rally. And most people believe that this bull market in precious metals started somewhere around mid-2015 when gold broke out from the $1,500 range. The second thing I look for is the gold price. Now, we only have two bull markets to look at, and from the first with a peak of $850 an ounce to the second with a peak of $1,921 an ounce, I'm looking for somewhere between a 2 to 3 times increase at the peak in the gold price. Since the last one was at $1,921 an ounce, we're looking somewhere between $3,500 and $4,000 gold. The next thing I look at is the gold-silver ratio, the number of ounces of silver it takes to buy an ounce of gold. Because typically, historically, we're seeing the low points for gold and silver somewhere around 80 to 1 and above. And this time around, we actually got as high as 127, which is unheard of. But we've been hovering around 79 to 85 for quite some time, still in the buy mode. And when gold and silver prices both move up and silver moves faster, that ratio comes down, and we're looking for a factor of somewhere around 35 to 50 to 1 as a signal that we have reached the peak and it's time to maybe start getting out of our for-profit position. Another thing I look at is sentiment. Okay, is everybody in the trade or is everybody out of the trade? Is gold hated or is it absolutely loved? And right now I could tell you sentiment is at some of the lowest points we've seen in some time, except with central banks, but investors are not loving gold right now. Interest rates, they've been low for so long, therefore there's been no competition to owning gold versus having cash deposits and getting a return at the bank. But in the past year, we've seen the interest rates come up by 5.5%, and as a result, there is some competition now for your dollars that might go to gold. For wealth insurance, there's no question you still need to buy it. For profit, you have to make a decision here, although I still think the potential for gold is much better than that 5.5% you might get at the bank. We also want to look at the dollar. The dollar is kind of the anti-gold, and gold is the anti-dollar. If the dollar's up, gold's down, and vice versa, typically. So right now, dollar is flexing its muscles a little bit. It's slightly north of 100. It's been much, much higher. Last year, it reached a peak of about 116. It's down significantly from there. I do not think right now we're looking at a strong dollar, just a weak dollar that's stronger than the rest of the currencies we're comparing it to. You want to look for social and political stability. Prove to me that that's going on either case. Either the social situation is calm and cool and collected, or the international scene is calm, cool, and collected, and I'll believe there's no reason to buy gold. Neither one of those are the cases right now. And the last thing you look at is kind of psychological levels, and we're right under one. That's $2,000 an ounce. It's not really a technical level, but when we get over 2,000, people say, okay, this is real money in gold right now, and we're breaching or about to breach all-time highs. So that is a key psychological level. It's going to take several times over that hurdle before we finally clear it for good. The key thing to know about all these factors, and the reason I want to have you kind of pay attention to them and look, is to see if we start seeing 1, 2, 3, 4 of them coming together. One does not signal the change to a bear market. It is not the end. It is still a dip, in my opinion. But when we start seeing 3, 4 of these factors come together in a convergence, then it's time to start looking for the exits. So I want you to just kind of keep that in mind until we start seeing that convergence. Then, to me, I don't care that we dip below $1,800 an ounce or $1,900 an ounce to the high 18s. It doesn't matter. That is just a dip to me until I start seeing the convergence. So it's a great opportunity to buy well, to buy cheaper than you ought to be able to do. As always, we like you to go ahead and join us on YouTube, like us, follow us, send us your comments and questions, join us on our social media, take our once monthly newsletter information line and our twice weekly email alerts. But don't ever forget that getting rich starts with keeping what's yours.